for us to track, but today, Mangalam, it's quite quiet after hitting record highs once again.
Yes, after hitting record highs once again, but it's good, right? A lot of times quiet is nice, and that's primarily because once it's quiet, people can actually calm down, look at the stocks that they're, interested in buying, etc., and go ahead and make a decision. But what's interesting is that the mid-cap index is outperforming today. Let's see where it goes from the highs of this morning, though. We're off on that index as well. But let's talk about the big mover, Gland Pharma. That's the stock in focus as the company has entered into an agreement to acquire CDMO player Cenext Group for about 120 million euros. Ekta caught up with Srinivas Sadu, who's the MD and CEO of the company, and spoke about the sales guidance for the Cenext Group going forward. Well, the pharmaceutical names do that to your tongue. You listen in.
If you look at the history of Cenext, right, when they have acquired the Roche site, it started off mostly with the ampule business. Then over a period of time, they acquired other assets. So they're not completely leveraged from the business perspective, the other sides. And they're moving towards a low margin ampule business to the higher margin, pre-filled syringe, lyophilization, the needleless injectors, the ophthalmic gels, sterile products. So they're moving towards this. A lot of projects are in place in the last 18 months. And that's one of the reasons you see the development services revenue has gone up to 25 million euros. So the shift from ampule business to the other side of the business is happening today. So I think that's why it looks flattish, but actually the revenue has moved from a certain low value items to the higher value. So the margin profile is increasing. So I would say, there's a lot of scope to increase the revenue as well as profitability in the near future.
Okay. The other bigger concern, rather, revenues, yes, but margins for the company. Just to give you some statistics, and I'm sure you know them already, CY21 margins were 13%. CY20 margins were 11%. First half margins were 19%. And historically, Gland has had higher margins. You came down to 28% in the previous quarter, but it's always been above 30% historically. Why are the margins so low for Cenext, and what does it do to your blended margins?
I think I'll go back to what I just said. When they started off, most of the revenue was coming from ampule, which is a low margin business, which they're moving out. They acquired a couple of sites in the last few years. In 2007, they acquired another site where they have installed capacities. And if you look at capacity utilization of these sites are pretty low in some of the lines. And that's where the projects are happening today and the revenue start building up. And as you know, in injectables, 80-85% of fixed costs. After a threshold, whatever you actually increase in the revenue, actually most of it flows down to the EBITDA. And we're pretty confident that the more utilization of the other sites which they have come into existence in the last couple of years, the margins will flow down and we'll see a better margin profile. And this we're talking about standalone as a Cenext. Now with Gland coming in, there are several synergies which we can work on, which will improve the margins, to where we are in the next couple of years.
Can we assume that margins will probably come down on a blended basis, say to a range of 25 to 30% initially?
In the near term, it could be dilutive in terms of margin, probably, for the first year. But like I said, we are looking at a long-term driver, maybe 12, 18 months down the line. Once, most of the projects which are ongoing at this standalone company starts kicking in, the margin improvement you'll see. And also, once the synergies of Gland and Cenext come together, the improvement will be more.
Okay, are you in a position to provide FY23 guidance now, because you had withdrawn it based on factors such as cost inflation? Are you in a better position now?
I think we still need some more time. I think you're aware of the situation better. Still a lot of different dynamics at the marketplace. We're seeing a lot of companies pruning down products. Some companies are, getting sold. So we're just wait and watch kind of situation. So I'll just still a little bit more time to come back to you on a solid forecast.
Well, Mr. Sadu, obviously the big worry is the fact that the stock is down over 50% from its 52-week high. You all have been struggling in terms of sales, at least in the past couple of quarters. Margins have come down to 28% versus your historical over 35% in some quarters as well. Can you guide investors where business is in terms of the near-term challenges that you have faced? One, in terms of competition in the US, two, in terms of declining COVID-19 sales, and three, in terms of the overall supply issues that you have been facing?
While I can't comment on the market dynamics and the movement of stock, from business perspective, yes, there are challenges in the US. The competition is higher, and because of a large base of COVID products, if you look at last year, as an injectable company, a lot of products of ours fall into that category. So there was a higher base last year, so we're comparing with that base. And added the challenges we spoke about, supply chain and all that, it did impact our revenues and margins. And of course, the cost inflation in terms of logistics all went up. So that has impacted our performance a bit. Like I said, we are evaluating the business from a business perspective. More and more customers who, for the internal products are trying to transfer to our sites because of the cost pressures. That's how our model always helps. When there's a lot of pressure on margins at the front end, the companies whom we have relationship with, they try to move products to our sites, and that's what is happening today, and which we have anticipated, and that's the robustness of model. It's just that we need to give time to mull over this, and then and if from launches perspective, we are launching several products this quarter. From a filing perspective, we are on track on filing products. Even the complex products we have filed. So from business perspective, from product perspective, we are there. It's just that the market dynamics panning out a little differently, and it should settle down pretty soon.
With regards to Fosun Pharma and the stake that they hold in the company, 57% stake, their valuation has fallen 50% plus in just the past couple of months. Have they communicated any intention to pare down stake or a larger plan for Gland?
No, nothing been communicated to us. We've been hearing, like you've been hearing. So for us, it's business as usual. We're focusing on our business. We have to start building the future of the company, and that's where we are focused at. So there's no communication from at all from our promoters now.
But you must be privy to what the parent company concerns are when it comes to their parent company, Fosun International, which has in fact been downgraded because of its over-leverage concerns. From that perspective, any kind of communication that you can share with us?
No, honestly, if you look at Fosun, it's a huge conglomerate. So we don't have interaction on a daily basis what they do at a Fosun International level. It's just not pharma. There are hundreds of companies under them. So we're just one arm under Fosun Pharma. Fosun Pharma themselves have more than 70, 80 companies. So we read news as you read. And we just talk about operational budgets and stuff like that, but nothing on this sort, and we don't have any official communication.
And there's no holdback in terms of capex as well as strategy and the overall plan for Gland in India.
Yeah. So everything is as per our plans. Whether investments or M&A, we have a roadmap, clear roadmap. What we have laid down. When we went for IPO, we clearly said where are we looking at from an inorganic perspective. And what are the products we're getting into? And nothing changed, honestly. Other than the macro environment, we changed last 18 months. Nothing basically changed from the strategy perspective.
All right, that is the management of Gland Pharma saying that there's a lot of scope for revenues for Cenext to go up. They also see the margin improving because of higher utilization. But on, Fosun, they're saying they've not received any kind of communication from the management with respect to a stake sale. So that is an interesting chat. But with that, it's time for our first short break on the